All right. Welcome everybody. Oh, happy birthday, Zar. Happy birthday. So this is going to be a simulation on, we're going to focus on gold here during the London session. Mostly, I think this time around, we're, we're going to try to focus on the 4 hour time frames, right? 4 hour time frames and where they can continue on when it comes towards momentum. So it's going to be a little bit of a swing trading, I would say, a little bit of a swing trading webinar on gold based on the 4 hour. So let's take a look here. So we're going to bring up gold. We're going to update the data here. Oh, pretty fast downloads. Nice. Raja Bank's got some new internet. All right. Let's close this. Go to new simulation. So is it beneficial to backtest more recent trades or old data like 2-3 years? It depends. Normally do like maybe the last 1 year, 2 years, because every 2-3 years the market dynamics change, right? And you got to be on top of the market dynamics. So that's why I only do like the last 1 or 2 years. That's it. So let's get our dates over here actually. Calendar dates. Let's get these dates. So we need around 10 dates. We're going to start from 2020. We're going to go till, let's go to like February. We're going to go to 2021. We're going to go till June 28th. First February, June 28th. We're going to choose Sundays. I kind of want to do some dates in 2021, within 2021 for the London session. That's something I haven't really seen nor done. Okay, there we go. We got November, we got September, November, December, January. Let's do February the 3rd, 2021. You good with that? February the 3rd, 2021? Because, April, it was like really, really volatile, so it was really, really easy. So August, okay, someone said August, 30th August, okay, awesome. Let's do 30th August. Abdur Rahman bin, all right, perfect. 30th August. Is it right here? August the 30th, right here. Oh, we're going to choose gold. Go to August 30th. We're going to start with, let's start with $10,000. We started a lot of times with smaller balances, so we'll start with $10,000. Commission per lot, real spread. Spread is going to be fixed. It's going to be a 1.5 pip spread, right? Actually, let's do 1.8 pip spread. Okay, perfect. Now, as we start the simulation, there's one request I have to make to everybody. Any question you have, just keep the question to yourself, because trust me, all questions are going to be answered without you even asking them. No matter how tempted you are to ask the question, no matter how much you think that, okay, this question may not be answered, it will be answered. Trust me. How long will it be? Probably like around an hour and a half, an hour and 15 minutes, something like that. Okay, perfect. So we have, you only chose 15 days back. Oh, yes, that's true. Okay, yeah, good catch. New simulation. Yeah, it's a very, very good catch. Nice analysis there. Let's go towards June 30th here. Oh, let's do this. Let's mute everybody. Okay, $10,000, New York close. Go to, actually, let's leave it at 1 to 100. Commission per lot is going to be whatever, like $7. Fixed 180, 100. Okay, so everything looks good, everything looks perfect, and let's start this again. All right, let's do it one more time. Close the browser. Okay, so we got the weekly, then we got the daily. Let's bring up the 4 hour. $30 and 15 minutes. There we go. All right, perfect. So here we are. right? Now, the first thing to do when you're looking at the times of the simulator, you got to identify what time will this correspond to your local time, right? So from the simulator, if it says 100 hours, just as you start with gold, this automatically means 6 p.m. Eastern, right? Whatever that is in London time, Turkey time, Italy time, Pakistan time, you gotta Google that, right? So this means 6 p.m. Eastern. So what we're gonna do is we're gonna move on towards pre-London, and pre-London is going to be around, I think this is going to be, oh, let me just remove annotations here because accidentally people try to zoom in and oh, how do you erase it? Okay. People try to zoom in and they kind of like draw lines there, right? Okay, so let's go towards New York Asian, pre-New York. So looking at the 1 hour time frame, all this price action, it really doesn't matter because we're focusing on the 1 hour time frames at pre-London. So we're gonna go right here. So let's forward this over, and 10 is going to be around 8, right? 800 hours. So 800 hours is around 1:30 a.m. Eastern. This is like around 2 hours before London Open, right? So if this is 2 hours before London Open, what we can see right over here, now we're going to start to analyze the charts, right? So now looking at the weekly time frame, we can see the previous weekly candles, they moved up to make a high. Now this is going to be a very, very rough explanation, right? Moved up, make a high, candle came down, retraced in a heavy bullish trend. Bearish candle closed weak, bearish candle indicating there's less bearish volume. Is it recording? Okay. Then we had a bullish candle on the weekly. Now, whenever you have a bullish candle formed after bearish candle, automatically that's support created, right? I would also encourage people to make some notes because some things I just say off the bat, and sometimes they can be pretty good notes as well. So whenever you have a bullish candle created after a bearish candle, that's when you have a support form. Now, this is the new weekly candle, and if we think that this weekly candle is going to move bullish, right, we have to identify that, okay, this is Monday, right? This is the first day of the week. Will the weekly candle move up in the first day of the week, or will it move up, let's say, later on in the week, like Wednesday, Thursday, Friday, Saturday? That's something you have to identify at this point. Now, if it's moving up, we can also assume that, okay, for the weekly candle to move up, it has to make a lower wick first. Because if it makes a lower wick first, that means it's grabbing liquidity to then continue moving bullish. Now, that's a very rough idea on the weekly time frame. Now we got to take a look on the daily and see what's going on. So now when we zoom into the daily time frame, what I got to bring up over here is line steadies. Okay. Now, looking at the daily, we had a lot of rejections below 1923, 1924, because all these rejections, they were basically price trying to move down. Because look, we look at now, this is very important when you're trying to tell stories by reading candles, right? Oh, we got Raja XRP coming in. Nice. Raja 4 XRP. Hope it goes to $5 XRP. Okay, so we had a support formed. Okay, that's the wrong color. Okay, we had support formed. Next candle tried breaking below support but closed above support. Then we had another strong bearish candle. We had another one weak bullish candle, no confirmations. Another tried to break below support, another tried to break below support, and then this one rejected support, right? So if we're rejecting support at this time, then we got to identify that, okay, now we're also breaking above this area right here. If we're breaking above this area 1960, then there's a higher probability for price to continue on towards, 2000, right? But from a price action perspective, this makes perfect sense. Let me just draw my analysis over here now, right? So look, we had this bullish candle break above 1955, 1959, and now we're probably coming up to an idea where price may continue moving bullish. So we gotta take a look at those ideas and see if that makes sense or not. So looking at the 4-hour time frame now, let's zoom in here a little bit, and let's scale fix this to like this, zooming in. So now the only thing we can see on the 4-hour here is that we have some sort of a resistance formed right here, right? A resistance formed right at this time. Now, just by looking on the 4-hour, the only reason the 4-hour candles should continue bullish if this new 4-hour candle which is forming right over here, can break the high of the previous 4-hour candle. If it can break the high of the previous 4-hour candle, not only is going to come up to fill this wick, but also we have all this range here to the left hand side because we got clean candles moving down. And if we can break the high, then there's going to be high probability for price to continue moving up, right? So now we got to identify this range. Now we're looking at it from a buying perspective. So if we break the high, the wick fill is like what, 33 pips away, and then moving all the way up, it's like around 180 pips away, right? But what if we don't break the high? What if we respect the 4-hour high? How far can price move down, right? So now when we're looking at it from a selling perspective, we can see that, okay, first idea would be to fill this wick around 30 pips away, and then secondly, we can possibly continue down towards the support 1964, which is around, let's 56 pips away. So now we're going to look at this on the 1-hour time frame and see if that really makes sense. So looking on the 1-hour time frame, this is something we can identify right over here. If we can zoom in at this point, we can clearly see that, okay, let's just do scale fix here again. See, now we're doing daily, 4-hour, and now we're going to look at the 1-hour time frame here. So we can clearly see that we're creating a support on the 1-hour time frame, right? So if we zoom in right now is the time to tell stories from candle based on a 1-hour time frame, right? We had huge rejections on the 1-hour, right? Small bearish candle, big bearish candle compared to the last one, right? But with a huge rejection. And this rejection is coming from the previous resistance form, right? Now, this is very basic price action commentary. There's no complexity, none of that sort, right? Then you had another bearish candle still respecting this area. Then we had another bearish candle, but still respecting support. So now, before volume comes into the market, which is pre-London has a lot of volume, right? Before volume comes into the market, we can clearly see that, okay, now we had a small bullish candle formed. This is a very, very good opportunity. If the next 1-hour candle breaks the low of the previous one, there's a very high probability for price to continue bearish, right? I guess we all can agree to that. And if we do continue bearish, I think the target could be this wick right over here, 25 pips, and then ultimately coming down to the support, which is around 68 pips away. So I think that could be a very, very good possibility for price to move into this area here. It's 1962 with volume coming in from pre-London and then coming in from London Open, right? So right here. Now let's take a look at this and move it over to the 30-minute time frame and see if it does really make sense based on the 30-minute time frame. So looking at the 30-minute time frame, let's scale fix this here as well because, you know, it's MT5. Oh, it's MT4. All right. So looking at the 30-minute, now this is a very, very strong support, right? And the way how it is a strong support, because look, this bearish candle closed with no wick at the bottom. So whenever price closes with no wick at the bottom, this means there is less probability it's going to go down. But essentially, like, you know, we want to see a 30-minute candle closing below the support for us to basically say that the 1-hour candles can continue moving bearish. So that's our trading idea right here. It's going to be sells if we break below the support, and I guess we'll be looking for buys if we can break above this resistance right here, right, which is far, far away. So let's see what happens here. So we're going to go towards risk percentage. We're going to be using 2% risk for trade. Isn't it making higher highs and higher lows? That's besides the point. We're looking at where price can go, right? I did a whole explanation on, you know, why price can go down and why price can go up. The only way price is going to go up is if we break the high on the 4-hour time frame, which is at 1973. If we don't break that area, then the higher highs and higher lows, they don't matter, right? Because we got to follow where price action is. And obviously we have this rejection right here as well. So we need a candle to break and close above this area for price to move bullish, right? So we're looking at two situations, sells and buys. All right, let's do this right here. Oh, wow. First 3 seconds just moved straight down. Damn, gold, okay. All right, so whenever price moves like this, we just got to be very, so to answer your question, wick fill, yes, that's a wick fill right over here. So see the first minute, price is moving. that's fine. We just got to be very calm. We got to be very patient with this. We got to wait. We got to wait for price to close because there's a lot of volatility right now, a lot of volume, right? So whenever price moves with a lot of volume, this is when people they want to jump into the trades. But we are disciplined, patient traders. We have to kind of like, wait at this time. Let's take a look on the 4 hour. 4 hour has also broken the previous 4 hour candle's low. Looking at the daily, just by looking at the daily, it kind of seems to me that the daily candle should continue down here a little bit, maybe a little bit. It should continue down. It should make a lower wick. So I guess that's where my selling bias is also coming from because look, the previous daily candles, they have lower wicks, right? So yeah, let's just wait and see how this candle is going to close, especially on the 30-minute time frame. Because so far we broke below support, 30-minute candles closing bearish in about 20 simulation minutes. So we're going to see. But essentially the bias is bullish, right? Based off of the weekly time frame. If you look at the weekly time frame, it's bullish. The only thing is it just needs to make a lower wick. And I guess that's what we're hunting. We're hunting sells based on the higher time frames making a lower wick. So let's just see. The 30-minute candle is about to close, and once the candle is going to close, we're going to see if we can potentially take a sell position. Oh wow, look at that push just at the last hour, just at the last minute of this 30-minute candle. And there we go. 30-minute candle has closed, actually it's right over here, extremely bearish. Now, here's the question. Can we take a sell over here? Because if we take a sell over here, our stop is going to be around 25 pips, right? So looking on the 15-minute time frame, this is also not a good idea to take a sell because, price has already broken support. Prices already came down. And, I mean, we can expect some sort of a retracement. Why did you not take an impulse entry? Because it moved down in the first 1 second. That's why. I should make a note over here. If you're coming in to the stream right now, things have already been answered. So, at this point, we can expect some sort of a retracement because look, the candles are closing at support, big rejections here, can't take a sell over here. It's going to be very, very risky. So we have to wait. We have to wait for price to kind of like come up, create like a minor resistance, and then continue moving down. Because it's already moved, what, like around 34, 35 pips. So instead of entering a position and risking a loss, we have to wait for price to create some sort of a retracement and then re-enter for price to continue moving bearish. Because the way it's moving right now, it's moving with a lot of volume bearish, so there's an opportunity for it to create a resistance and then continue down. Let's take a look on the daily. Oh yeah, look at that. Daily is also trying to move down over here. Weekly candle is also trying to move down to make a lower wick. 4-hour candle is also trying to move down. So I guess looking on the smaller time frames, there's a high probability for price to continue down to 1962. 1942 is a pretty good drink. So let's see over here. Oh yeah, look at that rejection. This is what we want. This is a very nasty retracement. But what we got to keep in mind is we got to keep in mind this support right here. We got to keep in mind the support. We want the 30-minute candle to close below, let's say 1970, this support over here. As long as we stay below the support, there's a high probability for price to continue down. Wow, this is wild. The way gold just moved. Dropped down and retraced right back up. No entries. Green tea with honey first thing in the morning. Best thing you can do for yourself. Okay. We got 6 simulation minutes left. Moving into still pre-London session at this point. Let's take a look at the 15-minute time frame. We are coming bearish. Candle is about to close. In 3, 2, 1. There we go. Candle has closed bearish on the 15-minute time frame. Looking on the 4-hour time frame, 4-hour is retracing. Now, okay, here's a little visualization that I want you guys to do, right? Now, if we can visualize the daily candle going bearish, because, it's early in the week, to continue moving up. It's like the same thing saying as, like, let's say if a 1 hour candle has to move up and the 1 hour candle starts, you're like, well, if the 1 hour candle has moved up in the first minute, it's very likely it's going to come down to make a lower wick, right? Same thing goes for a daily candle or the weekly, sorry. Then on Monday, right, it's very unlikely it's going to move up because it has to make a lower wick because the previous weekly candle had a lower wick too. Like cosmetically, it's just going to look good that way. So looking on the 4 hour, can we just visualize that the 4 hour candle wick down, retraced to continue moving down? This is something we explained in the previous simulation that we did. Now, if we're looking at a selling bias, we got to make sure the smaller time frames align with our bias as well during a high volume time. So looking on the 1 hour time frame, the only thing we can see on the 1 hour time frame is that we closed below this support, broken close below this candle for price to go down to possibly a wick fill, but also this is a huge rejection too, so we're unsure. But we got to ask ourselves, what's the probability that the next candle will continue down rather than moving back up in the range? We got to ask ourselves that question, right? So keep the answers to yourself at this point. Let's take a look on the 30-minute. Looking at the 30-minute, we can see that the 30-minute candle closed bullish, but it closed below support. Okay, 1 hour candle is giving the confirmation for sells. 30-minute, however, is showing a bullish candle, right? Now, let's take a look on the 15-minute time frame. Looking on the 15-minute, we broke below the support. Candle broke below, rejected. Next 15-minute candle closed bearish. Right now, 15-minute is giving the confirmation for sells. 1 hour candle is giving the confirmation for sells. 4 hour is the visualization for this candle to continue moving bearish. Daily and weekly is also a visualization for the candles to make lower wicks. Right, so now we got to put our money on the line, right? So money on the line is probably going to be a stop loss above the 15-minute candle, which is going to be around, I would say, let's put on visual mode over here. This is going to be sell, right? Stops are going to be above the 15-minute candle. TP, we're going to remove the TP over here. So we're going to go to trades, we're going to remove take profit because we're going to be securing positions along the way, right? So now we're identifying that the 1 hour candle should continue moving bearish without breaking the previous high because we broke below support. That's it. Trusting the 1 hour time frame and using 15-minute as confirmations. Low formed retest of the low. Yes, perfect. That's all what we're looking at this point. So we're running at 12, 11. Oh, I guess right at this. Uh-oh, should have secured at 13, 12. Okay, right here. Right here, we're going to close partials. Close around 90%, and we're going to put stops at break even, and then we're going to let the rest run. Rest is around 0.161. Oh, damn, we're filling the wick over here. Perfect. Let's take a look on the 4 hour. 4 hour is coming down to, like, fill its own wick. Looking at the 1 hour time frame, we've broken below that candle. It's only 6 minutes in right now. This is pre-London, right? 33 pips, 30 pips, already secured 2%. Let's take a look on the 15-minute. 15-minute broke the previous low. We've broken below this liquidity wicks here as well. 15-minute candle is about to close. 30-minute candle is still open. 30-minute candle has also broken a low. So you see how on the higher time frames, the higher highs and higher lows, they didn't matter because the smaller time frames, they were flipping in the opposite direction, right? The small time frames will always, like, dictate where the higher time frame is going to move. All right, let's fast forward this candle and see how it closes, the 30-minute candle. Oh, wow, 30-minute candle. So this is just the runner running at this point. This is a position that's just running, right? So we're going to put 15-minute, maybe bring this stop loss above the 15-minute time frame right over here. Wow, 70 pips. Did not really expect this candle to continue dropping. I'll take this drop any day. This is where this is where you get price just move. Crazy move. So now if we're breaking below the support, right? Okay, now we've approached the support right here, right? So this is just pure movement of price. So we're going to see if we can kind of like add a position. I think it's going to be pretty tough because if we can break below the support, Our next area of support is somewhere right over here. Are these sessions recorded? Yes. If you read the announcements, it clearly says they're recorded. Sorry, Nifak. Yeah, they're recorded. Okay, so we're going to see if we can add a position to this trade without getting stopped out. The 30-minute candle is about to close. Let's fast forward to see how it closes. Okay, perfect. So it closed like this. Yeah, I don't think we'll be able to add a position because we're at a support right here. I guess we want price to kind of like break below this low and then continue down. Maybe on the 15-minute. So 15-minute candle can close, secure some more profit. No, we're gonna let it run. We've already secured profit. Stops are at in profits. We've secured 2%, so we're gonna let it running over here. The 30-minute candle is at support. We're creating a support. Now, this candle needs to break the low of the previous candle to continue moving down. That's what we want. We need it to break the low of the previous candle. I think that's where we can enter another position for price to continue bearish. The 15-minute candle is also about to close. 1-hour candle will be also breaking the lower wick of the previous one, right? For price to move down, it has to make lower lows and lower highs. So if this candle breaks the low of the previous candle, then that means it's making a lower low and securing a lower high. All right, let's speed it up here a little bit. Okay, 15-minute candle has closed. Let's take a look at this. It's closing bearish. A lot of mess here to the left hand side, so we're going to stick with the 30-minute time frame. Yeah, see, nothing. Can't add position, can't take a buy because, we haven't broken the high on the 30-minute. We're waiting for price to break the low. This is also London open time. Oh, almost coming close. Coming close to break the low on the 30-minute. And then we got to identify where our stop is going to be, right? I think a stop is going to be based on the 15-minute. Okay, there we go. Look, right? We're breaking the low on the 30-minute time frame, right? This means now there's a high probability for price to continue to at least, let's say, 46, 47 more pips, right? Now, looking on the 15-minute, we got to identify where the stop is going to be. I think the stop can be, I would say, within the range. Just by looking on 30-minute stop is going to be pretty big, 39 pip stop. So we're going to go with a 0.5% risk over here. Maybe put the stop loss around 30 pips because if it's breaking the low, we're not expecting price to continue back up, right? If it's breaking the low, we're expecting price to continue back down. And if you look on the 1-hour time frame, if we're breaking the low, then we're expecting it to continue moving down only because we're moving in a very, very high volume session, which is the London session, right? Looking on the 4-hour time frame, damn, we're also coming down on the 4-hour time frame. We got clean candle here to the left on the 4-hour, which means there's a very, very high probability for price to continue down. Around 60, it just looks pretty nice for it to continue down. Let's take a look on the daily. Daily is also making the lower wick just as we expected, right? So yeah, it makes sense, right? So we're going to put our sell. We're going to put our stop maybe somewhere in the range here. Hope we don't get stopped out, but it's only 0.5%. Stop is going to be, let's modify the stop over here. Take profit here too. Take profit. Okay, remove take profit. Okay, perfect. We broke the low, impulse entry, added a position, 0.5%. Nothing big, 0.5%. Right, we've broken the low and hope it just continues moving down. Oh, wow. So this is where impulse entries are very risky because essentially you're selling the lows, right? So that's why I'm using lower risk on impulse entry. Let's speed it up here a little bit. All right, perfect. Coming up, that entry is in like 12 pip profit at this point. First entry is at 90 pips, 14, 13. Let's see on the 4-hour time frame, we got clean candles on the left-hand side. We're anticipating price to continue down towards, let's say 1956. I think that's going to be a good target, 1956. Not going to close partials on that first entry, second one, because, it's only 0.15. It's only 0.5% as well. So the 30-minute candle has closed. We've also broken the low right here on the 30-minute, on the 4-hour, man, this looks nice for it to continue bearish. Just needs some more push. Maybe in the last hour of this London Open candle, we can get a decent push till 1956. Oh, there we go. We're coming down now. Probably going to put stops at break even right here, and maybe modify the stop loss from the first one all the way down to this area. Beautiful trade management here. All right, coming down to 1956 over here. 30 pips, 112 pips. Oh, crazy. All right, let's just secure this right here at 50 pips. Let's secure this at 130 pips, because we're coming up to a huge rejection area on the 4-hour. So this, once we started breaking the low on the 4-hour, it was just clean move on the 4-hour to continue down. Clean move, right? First trade simulation, waited for the first hour, executed in the second hour, 2% risk, 0.5%, close 4.8%. Hopefully, this is how I go on the leaderboard. Imagine the leaderboard first 3 days just lose money and people just get mad. Man, Raja Banks lost money. All right, perfect. Let's go on to the next session over here. Let's pause this and go towards the next London session. Oh wow, moving to New York, we just got consolidating and price moved up. When are you going to be on the leaderboard? I'm going to be on the leaderboard probably not this week, but next week. But you'll have to find my account. I'm not going to share it, so it's going to be a challenge there. So if I'm going to do the work, you guys will have to do the work as well. All right, let's move on to the next one over here. So 5, 6. Oh damn! Weekly candle is moving bullish here finally. Okay. Daily is also moved up. All right. So pre-London. So we come towards the new pre-London session and we see that price has done exactly what we anticipated when the week started. Was price to continue moving bullish, and we're like, oh man, now what do we do? Right? So the best thing to do at this point is to just reanalyze stuff, right? So looking at the weekly candle, I think there's a very high probability for the weekly candle to continue up to fill this wick to the left hand side, which is like 300 pips away. Wick to the left hand side, because we're moving bullish at this point. Let's see if we have any news. We have no news. Nothing. I think we have NFP at the end of the week over here. That's fun. Okay, now looking at the daily also has a range to the left hand side, which we can anticipate price to continue moving bullish all the way up to that range. Looking on the 4-hour also has clean candles. So this is what we were anticipating when the week started, right? But this move happened in the Asian session, so we can do, there's very little what we can do about it. Mostly there's nothing that we can do about it. So let's take a look on the 1-hour time frame. Now, the good thing about the 1-hour time frame is that we're creating a support on the 1-hour time frame. If we're creating a support, we're also creating a resistance right here on the 1-hour time frame. Right now, when we take a look to the left-hand side, we can see there's a clean area going all the way up towards 1992. Right, 1989, 1992. What news are you looking for? Gold? Something probably related to the US. So there's no news for the US here. Nothing. There is later on in New York session, but we're not focusing on the New York session. So let's see how far this is now. So this range is 49, 50 pip range, right? This is a 49 to 50 pip range. This move happened in the Asian session. If you look to the news, there was probably nothing happening in the Asian session that would maybe validate this move. So if there's nothing that happened in the Asian session to validate this move, if we break below support, this entire move up, there's a very, very high chance this could be corrected, right? But so far we're looking for buys because bias is bullish. We're just keeping these things in our mind. Now, looking on the 30-minute time frame, what we have here is price creating a support, right? And then price creating a resistance right here. And if we're creating a support in an uptrend for price to move up, I think there's a high probability for price to continue up to retest this range around 1988, 1989, right? So yeah, I think moving into pre-London, this could be a very, very easy trade. Let's take a look on the 15-minute time frame and see what the 15-minute time frame is saying. Looking at the 15 minute is whatever. Like we got this resistance here. If we break this resistance, we can continue moving up. But we got to put our trust in the 30-minute time frame, 1 hour time frame for price to move bullish, 4 hour time frame for price to move bullish. So let's take a look on the 30-minute here. Okay, perfect, right? Now, just by looking at this candle, let's take a look at this candle here. This candle has no wick to the bottom side, right? Which means there was no bearish volume for price to go down at all. It just went straight bullish and it left a wick in an uptrend. Whenever you have an uptrend, there's a high probability for price to fill the wick and then to continue up towards this resistance right over here. So that's what we're going to focus on right over here now. So we're going to move on with our normal risk. It's going to be 2%, right? We're going to take a buy right here. Our stop is going to be below the 30-minute candle, which is around 14 pips. And TP is probably around, let's say, 24, 25 pips. Yeah, I think it makes sense. It's a pretty easy trade. We have bullish momentum, creating support, no wick on the bottom of this candle, higher probability for price to move up. That's basically it. So I mean, there's a high probability for it to continue bullish, and that's the probability we're going to play off of. Once this candle breaks the high of the previous candle on the 30-minute, it should continue moving bullish to retest this high. Oh, there we go. 15 pips right there. Gonna close 90%. Gonna put stops at break even. And that's it. Just let the rest run. We're coming up to, there we go. We've reached the high at this point because look, price made a high, came down, created support, and now there's a high probability for it to retest the high. This is the money trade. This is the most easiest trade you can get in the market. Price moves up with volume, creates a high, comes down, creates support, and then goes up to retest the high. That's it, right? So we're going to close more partials over here. Actually, we're going to leave the rest running. No, actually, we're going to close 90%. Actually, close 50%. I'm kind of confused because we reached the high, so there's a high probability for it to reject this area as well. That's why I want to secure as much as I can. But if we break that high, then adios, amigos. Could we have entered at the previous candle? Yes. You could have entered at the previous candle, but that's not the time we were looking at the markets. All right, looks like we are rejecting that area. Okay, 30-minute candle has closed. We're rejecting that area, so this now becomes a range. Now we just gotta anticipate this 30-minute candle to break the high. Once we break the high, then I think there's a high probability for price to continue bullish. Oh, there we go. We're breaking the high at this point. Very nice. Let's take a look on the 1 hour time frame. 1 hour time frame is also breaking the high. Now the trick is we need the 1 hour time frame to close above that area. So we can't add a position because we need the 1 hour candle to close above this high right over here. If we break the high, can we add another position? See what I'm saying? The question will be answered even before, okay, you asked it before. But for us to add a position, we need this candle to kind of like, close above this area. Even though if we add an impulse entry, yeah, 15-minute never really broke the high over here either. 4 hour candle, we can't even add it because the 4 hour candle looks like it may make a lower wick over here because it just filled the wick. Right? We're also moving into London Open. Oh, our position got stopped out. All right, let's see how this candle is going to close. Okay, so 1 hour candle went down, almost broke the low, and it closed bullish At this point, we want price to kind of like, maybe continue moving up, but for it to really continue moving up, we needed to, I would say maybe make a lower wick, break this high, and then fill the wicks to the left hand side, and then continue moving bullish. That's what we want. We needed to first make a lower wick, and that's going to be our second trade for the day at London Open. We wanted to make a lower wick first. It's breaking the high at this point, but it's breaking the high in the first minute. So probably not yet. I mean, if we missed the trade, we missed the trade, but I still think it's a little early. I wanted to probably make a lower wick in the first 15 minutes of this hour at least, because in the first 15 minutes we can make a lower wick and then break the high to continue up. I think that's going to be a very, very high probability for price to continue bullish with this bullish momentum at least. Oh, there we go. Nice. Now we're making a nice solid wick down. Okay. Perfect. Perfect. You still target 10 pips? Yes. 10, 15. 15 pips you can get with gold easily. See, now we're making a lower wick on the 30-minute time frame. We're making a lower wick on the 1 hour time frame. So this gives us a very, very good opportunity for price to continue down. I got you inspired by the simulator. Yes. Simulator was something that really inspired me to create Magic Keys. Like I wanted this whole terminal on a handheld device. All right, there we go. We are now continuing to go up. So now we got to wait for this candle to break its own high for price to continue bullish. Actually, like, you know what? If we're breaking the high at this point, probably going to use a smaller risk over here. 0.5% risk. Take a buy. Stop is going to be kind of like within this range. We could target around 1991, something like that, and maybe accept it. Take off, take profits. Looking at the 1 hour time frame. See now the 1 hour time frame. The previous candle made a huge exhaustion wick, right? We closed the minor bullish candle. This new 1 hour candle, it broke the high here first, came down to make a lower wick, and now it's starting to move up in the almost the second half of the 1 hour candle. So now you got to ask yourself the question, what's the probability it's going to continue moving bullish versus what's the probability it's going to go back down, right? Looking on the 4 hour here as well, it's just bullish, right? Looking at the 1 hour, it's bullish. Looking at the 30-minute, it's bullish. So I mean, there are higher chances it's going to go up rather than go down. So that's the probability we're going to play off of. Okay. Still hovering in drawdown. The 30-minute candle is about to close. Aiming to secure around 10, 15 pips. Let's see. Yeah. I would say it's going to be good. Oh, look at that. We're coming down over here. We're in almost 10 pip drawdown. So we're going to close partials, close 50% managed risk, and leave the rest running. All right. Oh, wow. It closed back in the range. Now, here's the thing, right? Candle closed back in the range on the 30-minute candle. We already managed risk, right? We already closed partial positions. Now there is no need to close another partial position because we're already using a 0.5% risk. We secured or we closed partials. If we close more partials and price goes into profits, then we're going to be eating into our profits at that time. So since I've already closed partials, I'm just going to leave the rest running. Oh yeah, we got stopped out. Yeah, 1 hour is tricky at this point. Yeah, I'm going to be sitting out at this time and just just chill out. Took one trade, gave the trade a second chance, and then that's it. So let's see how this 1 hour candle is going to close. So we're going to move forward by 15-minute. Oh wow, last 15-minute candle just moved bullish. Interesting. It is what it is. Something we expected, but didn't really expect the 30-minute candle to close back in the range. We wanted to close above the range so we can continue bullish. So this was a very, very risky trade idea at that point. All right. 1 hour candle closed right at resistance. Look to the left-hand side, right? Rejection area, right at rejection area, 1 hour candle closed. And wow, look at that rejection over here too. Yeah, we're staying away from this area here now. So let's take a look at news. I think we got NFP, future events. We got NFP, ADP. Yeah, we got NFP over here. I think gold requires you to have at least 15 pip stop. Yeah, I mean, still, it's still okay. 15, 20, it depends, right? Sometimes, the stop is going to be bigger because the candle wicks are bigger, candle bodies are bigger. So, okay, let's move on towards the next London session. Right, Wednesday we took one trade, won one trade, took another one, lost that one. So but we managed risk. So we're gonna move on towards the London session here now. See, now this is Asian Open, right? Look at the time. This is Asian Open. We don't trade Asian Open, but looks like price may correct this move up that we had, right? Remember we talked about that? Price may correct this move now at this point. Oh, damn. Look, wow, what was this? This is like a 280 pip move down in an hour. Look at this 30-minute candle. Look at this 15-minute candle. Wow, shit. This is a huge 15-minute candle. 112 pips move down. Crazy. Crazy. Yeah, we gotta move on to our London session. Was it news? Could be news. Could be breaking news with the yen or something. Nothing that we can see over here, but could be some breaking news with the yen. Crazy. All right, let's move on towards our good old pre-London. All right, now coming back to pre-London session right here, let's remove all analysis. I think someone told me to press Control B. Oh, there we go. Control B, and we gotta delete everything. Let's move on to the 4-hour. Control B and delete everything. Oh. Yeah, this is way easier. Okay, let's remove everything over here as well. Let's remove these two lines. Okay, perfect. Let's do some fresh analysis now. Looking at the weekly candle eventually did move bullish. Do we always start each day with clean charts? Yes, clean charts and new levels all the time. Whenever I look at the charts, I just clean everything up, right? So looking at the weekly went up, came back down. Awesome. Let's take a look on the daily. Daily candle is interesting now at this point, right? Daily candle basically went bullish, rejected that entire area, and now this new daily candle has broken the low of the previous daily candle, which means that we're creating a possible resistance for price to possibly continue moving bearish, right? Because that's what technically the daily candle is looking like at this point. Let's take a look on the 4-hour time frame. 4-hour candles are also forming bearish, but we're coming up to a strong rejection area here in the 4-hour time frame, right? Strong rejection area. Now we got to see if the 4-hour candle can possibly, like, fill this wick over here, which is around 40 pips. But we're unsure how far this new 4-hour candle is going to retrace to continue down, right? Because we wanted to have a top wick to continue down. Let's see if the small time frames can justify that move. Okay, looking at the smaller time frames on the 1-hour candle, we can see that we're creating a support, but we're very heavy at support at pre-London, right? If we're very heavy at support, this means there's a very high possibility that we can continue moving down to fill this wick, 39.40 pips away, and then eventually continue down further towards 1954. So that's something we have to identify at this point now, and we're going to see if it's going to work out in our favor or not. So let's take a look at the 30-minute. 30-minute is also forming or closing below the support right here. And I think if we can break below this low, there's a high probability for price to continue down. I really do believe that can happen. So looking back on the 1-hour time frame, that does make sense, right? Because if we're coming down, we're creating a support. All we got to do is break below this area and then continue down. So 30-minute, yeah, we want the 30-minute candle to make a top wick, break the low, and then we're going to take an impulse entry, right? So this is what we want to see. We want to see the candles make a top wick and then break the low. Once it breaks the low, then we have to take an impulse entry. Oh, impulse entry for price to continue on moving down. That's what we're visualizing at this point. So let's see if that happens. We want it to make a top wick and then break the low. How big the top wick could be, I mean, yeah, this is fine right here. You know, if it continues down and breaks the low, I think that's going to be a pretty good impulse entry there for price to continue bearish. We're already up 6.6%. You know, it's pretty good. Not bad at all. 6.6%. Damn, I'll take it. I'll take it any day. All right, so we're coming down, back down. Slowly about to break this low right here. Let's take a look on the 15-minute time frame. 15 minutes looks really, really juicy here, right? If we break the low on the 15-minute, I guess we can continue breaking down. 15-minute candle is about to close. Let's see how this candle is going to close. Will it reject or will it break the low? 30-minute candle is also about to close in 5 minutes. See, now here's the problem here now. The problem is that the 30-minute candle is about to close in 5 minutes, right? And we don't know whether in the 5 minutes will it continue pushing bearish or will it push down and just leave a wick and close above. That's something we don't know. If this was happening maybe in the middle of the 30-minute candle, then it would make sense. But if it's happening in the last 4 minutes, 3 minutes, it gets a little bit risky at that point. So probably going to wait to see how the 30-minute candle closes and then make a decision. Because I don't want to take any risks over here. I mean, trading is risk, but it's all calculated risk. Yeah, see, it's breaking the low in the last minute and a half. It's not even worth it at this point. Yeah, not even worth it at all. I mean, it's just too risky. All right, so the 30-minute candle has closed. It's very, very tricky at this point because now we want the 30-minute candle to make a top wick again and then break the low to continue down. But if it just breaks the low and drops, then we possibly going to miss the trade, right? Couldn't really enter at all. I mean, how big was this drop over here? 13 pips. Yeah, 13 pips, 16 pips, baby pips, minus spread. You know, we got almost like a 2-pip spread. So 15 minus 2, 13, not even worth it. Not even worth it. So some battles you have to learn to let them go. You know, some battles are not worth fighting at all. Yeah, no wick, nothing. This is Wednesday, and oh, we also have ADP coming up soon. We got ADP coming up soon. They're looking at, oh, great numbers. Damn, they're looking at 1.2 million people employed, then 200,000. So looking at really, really good numbers. So that should push gold further down. Interesting. Very, very interesting. We also have NFP. So I'm guessing probably price may range over here or something. Yeah, we're just ranging at this point. We're just ranging. The only thing technically we have above this area, if we can break above 1966, there's a high probability we can fill up this wick and we can continue on towards 1971. But right now we're just ranging at this point here. Looking at the 1 hour time frame. Yeah, we got this resistance here in the 1 hour time frame right here. 4 hour is also at a very, very strong support. So yeah, at this point it's just nothing at all. Let's forward it by 30-minute candle and see what happens. 30-minute candle is, yeah, still ranging. See, at this point, we just range. You said in the beginning that the market changes every 1 to 2 years. Does it mean we have to change the way we trade? No, we don't have to change the way we trade. The market dynamics change in terms of volume, in terms of spread. Because if you look now, since 2020, the spread on gold has been pretty high, right? 2 pips, 3 pips at times. Before 2020, spread on gold was like 1.5 pips, 1.4 pips, was less than 2 pips. But since all this volatility came in, all this volume came in, the spread has been super high on gold. So, like, the market dynamics also changed because of the lockdowns now, the vaccines now, and the way, like, the economies are adjusting to all those things. So that's how the dynamics are changing. All right, so this candle is about to close. Oh, we're breaking above the highs at this point on the 1 hour time frame. Let's see how the candle is going to close. We are closing bullish at London Open, which is a very, very high volume time. So now, just by looking at what's happening at this point, let's tell stories by looking at candles. Now, first, our bias was sells. Obviously, sells didn't play out. And the way how they didn't play out was, look, we had a huge rejection. We had another rejection, another rejection. We had candle closing bearish. This candle broke the low of the previous candle to continue down, but it didn't go down. It went bullish, right? At the same time, we created resistance. This candle, it respected the low of the previous candle and it broke the high of the previous candle, making a higher high and a higher low, right? Kind of closing above this consolidation over here. So if we're closing above consolidation after making all these wicks and attempts to go down, and if we couldn't go down, where's price going to go? What's the probability where price is going to go, right? The high probability is that price is going to continue moving bullish, right? And if we look to the left hand side, we got to ask ourselves that, okay, if price is going to go bullish, how far can it go, right? So first of all, we're closing above this resistance where 1, 2, 3, 4 candles couldn't close. If this new candle, London Open candle, breaks the high of the previous candle, there's a very high probability we can fill this wick to the left hand side, 24 pips away, and then we have clean range going all the way up towards 1972, 1971. And that's going to be our runner to do all the heavy lifting. So now let's look at this idea on the 30-minute time frame. Let's remove all these analysis from the 30-minute. And let's take a look on the 4 hour first. 4 hour also looking bullish. Rejection of the support. Looking at the daily. Daily seems like it can go back down, but probably daily is waiting for ADP to go down, because if you look on news, they're looking at really good numbers for the US, right? And if we're thinking that daily candle move down to retrace and then go down, I think that's going to happen with the news, and we're going to take a look at how news affects this price change. But so far, technically, on the 1 hour time frame, we're looking pretty solid to continue moving bullish. So probably going to look for buys with a 1% risk, because, this is trading against the trend. Trend is down, so we're just going to try to see if we can continue on up. So let's see here. Breaking above the 1 hour time frame. Not looking at the 30-minute, just focusing on the 1 hour. Using lower risk. Okay, so we're breaking the high on the 1 hour time frame in the first 20 seconds. Yeah, it's kind of risky at this point. In the first 20 seconds, do we really want to take this risk? Probably let's do it on the low risk side, right? Even though something just does it, just do it on the lower risk. So I'm just going to use 0.5%. Because if we even lose 0.5%, we're already up 6.6%. Doesn't really make a difference at all, right? This is just for like being in a trade purpose. If it plays out, then we're going to have some sort of a bias that, okay, this thing we focused on someday, it played out. So maybe it's going to play out again. So this is just a paper trade we're trying to take over here. Just a paper trade. Only that we're breaking the high. We had a lot of rejections here to the downside, and that's it. If it goes up, perfect. If it goes down, it's only 0.5%. That's it. Right? And maybe probably it's going to go up as liquidity grab to just drop with the news. Because this is a very, very good news anticipation over here. I don't think if you guys understand, but the previous was 212,000. This is 1.2 million. They're looking at 1.2 million. That's huge. That's a huge, huge number, 1.2 million. So if gold's going to really drop, I think London session is just going to be a liquidity grab and then to drop in the New York session. So this 0.5% is still open. Yeah, let's just see. Shouldn't have taken that, but it's just small risk. So yeah, let's speed it up here a little bit. The 15-minute candle is also about to close. Oh wow, yeah, okay. Let's forward it, see how it closes. Oh damn, close back down. 30-minute candle just dropped over here. Pretty solid drop. How much did we lose? 0.5%. Wow, solid move down over here. Damn, Raja Banks took a beating here today. That's why I used a lower risk. All right, let's see how this 1 hour candle is going to close. Close with a huge rejection. Yeah, this I'm staying away from now. This is very risky. Do you think that if we were at the real speed, we could have gotten that movement down? No, I don't think so, because it just moved way too fast. There were a lot of wicks over here. There was no confirmation. This candle, you had this support on the 15-minute. This candle closed above support. This broke below this low. We had another wick over here, another wick over here. It's just way too risky. Way too risky. So let's just see. Let's move on towards ADP and see if we can see what happens at ADP. So ADP is at 15.15. This is 12, 13. Oh wow, moved up over here on the 1 hour time frame. 12, 13, 15. 15, okay. ADP is going to come in soon. We're going to try to do some buy stops and sell stops for ADP and see if it plays out. Let's speed it up here a little bit. Speed it up, speed it up. 11, 12, 13. All right, there is ADP right here. This is the ADP candle, and normally for news, I would do buy stops and sell stops, and those buy stops and sell stops are going to be above and below the previous candle if it's not that far away. But just by looking at this right here, our buy stop is like around 32 pips away, and sell stop is around 50 pips away. So it's not even worth it because they're just too high. So we're just gonna watch how news plays out and just oh wow, damn, look at that move. Crazy 50 pip move above that area. Yeah, so actually there's a lot less than forecasted, 428,000. It's still pretty good, still pretty good than the previous one. Look at this 1 hour candle, went right back up. All right, let's move on to the next session over here. Pretty interesting simulation session, this one. All right, let's move on to the next one. Let's take a look on the 4 hour. 4 hour closed like a dumb, like a dumb doji candle. Looking at the daily is still bearish. You won't be surprised if for NYC Open, daily moves down. Oh wow, it did move. Oh damn, it did move down for the NYC Open. Okay, it's fine. Let's move on to the next London session. See, so we're not focusing on how the New York is moving. We're only focusing on the London session because you have to focus on just one session and just stick to that. Most times, we get attached to one move and we keep looking at that move in the London session, moving into New York session. And sometimes, man, people, hold positions well into the Asian session. And I'm just like, at that point, why? Just let it go. I've done that. All right, let's take a look on the daily here, see what's going on. Also, we have no news over here. We have actually no news. And then we have NFP. They're looking at a little less, but we'll see how that plays out. So looking at the daily, obviously daily is moving bearish. We were correct on that move down on the daily visualization. We are moving down now more. We have this wick to fill, which is like 40 pips away. And then we have the support, which is almost 100 pips away. right? Let's take a look on the 4-hour time frame. 4-hour candle closed with no wick at the bottom, but we had a huge rejection, which means there is kind of like a probability for price to go down. We have clean candles through the left hand side, but at the same time, we got the support over here. So now we got to take a look on the smaller time frames and see how valid this move down could be. So looking on the 1 hour, yeah, we have the candle closing with no wick at the bottom on the 1 hour time frame. So ideally, we would want this this new 1 hour candle to probably make a wick up, retrace, and then continue on moving down. I think that's going to be a much better idea to trade on. Um, yeah, because this is just extremely tricky at this time. Let's take a look on the 30-minute. 30-minute also closing with no wick. We would definitely need a candle to probably wick up and then continue down to take a sell. So let's see. Let's see. Right now, it's just this range is what, 34 pips, 30 pips. Not even worth it that much. I wouldn't be surprised if price just ranges here for this one and then moves into the NFP with a lot of volume. NFP week. NFP week is a pretty hard week, but we're still up 6%. Good thing we had some good trades on Monday and Tuesday. All right, so now this is the new 30-minute candle. Let's take a look on the 1 hour candle. 1 hour candle is still like this. 30-minute candle. If we break the low here, the range is like 17 pips, not even worth it. Not worth it at all. Because you need at least like I would say like a 25, 30 pip range on gold for price to move in. But when the ranges are small like this, it just gets very, very risky. All right, let's see how this 30-minute candle closes. 30-minute candle closed well below the support. Now we need some sort of a retracement. But if we don't get that retracement, then I guess, see, now we're getting that retracement. Now we need a little bit of a resistance to be formed. Something that we had in the first trade we took. So if we go towards charts, we go toolbars. Was it toolbars? No, I think it was charts. Toolbars, charts. Yeah, it was somewhere right over. I think this was this one right here. Yeah, this one right here, where price broke down. We took sells on the 1 hour time frame. We had a little retracement, and then we broke the low to continue down. So that's what we're anticipating right here. We broke down. We need a little bit of a retracement, a little bit of a resistance formed, and then break down to continue down. If you don't get that, then there's going to be nothing to look forward to. And then I guess we're going to move on straight towards NFP. NFP. 15-minute time frame. See what's going on. This candle's about to close. If it can close bearish, give us a nice stop, I think we can continue bearish. All right, 15-minute candle has closed bearish. We're moving in a high volume session. Now, the thing is, the question is, can we take a sell at this point, provided we have a minor support formed in the 15-minute? And this support is like 24 pips, not bad actually. Looking on the 1 hour time frame, 1 hour candle is still open at this time, right? So we're maybe we are looking at it to continue down. But looking at the 30-minute time frame, 30-minute is also rejecting this area. We're closing below this area. So yeah, I guess we can try to take a sell over here. I guess so, looking on the 15-minute. Right? Because now we're anticipating the 4 hour to continue down because we're breaking below the support. We're looking at the 1 hour to possibly break below this area and continue down. Looking on the 30-minute, 30-minute is closing below this area, something that happened in the first example we did. right? Now, but we want to see how far this 30-minute candle is going to make a top wick. And that information we can get from the 15-minute time frame. Looking at the 15-minute, we don't want this candle to break the high of the previous 15-minute. And then we want to continue down. So break the low of the 30-minute. Yes, so what we're going to do is we're going to do a 1% risk sell. Stop is going to be somewhere right about here. We're looking at price to break below the low of the 30-minute. And the reason we're going with a smaller risk is because once we break the low on the 30-minute, then we will look to enter another 1%, make it a total 2%. That's what we're anticipating at this time. So yeah, 15-minute is, oh nice, we're rejecting that area. We got to break below the support, which will be the break below on the 30-minute time frame, and then we can continue moving bearish. So looking at the 30-minute, oh, we're breaking a low on the 30-minute. We're going to close partials right here. We're going to close 90%. We're going to put stops at break even, and now we're going to possibly add another position right here, and we're going to leave the rest running to see if we can continue moving bearish here or not. So we got to identify where the stop is going to be. So another 1% is going to be added right here. Our stop is going to be, I think, well within this range. We're looking at price to possibly continue down for another, like, 20, 25 pips probably. Let's take a look to the left hand side. Looking to the left, okay, we have clean candles here to the left, right? And these candles, they go all the way down towards 20, see right over here, 27, 1927. That's where we can anticipate price to come down to. 1927, 1929. Yeah, I think that's going to be a pretty good idea there. 28, 29. Perfect. Hopefully we don't get stopped out on this re-entry over here. This is a pretty good impulse entry before the London Open. And as we're moving into volume into London Open from pre-London, I think we should be continuing bearish. Oh, nice one. There we go. 10 pips, 12, 13. 13. 13 is good. So we're going to secure 50% right here. 50%. Put stops at break even. And that's it. Let's take a look on the 1 hour time frame. If we can continue down towards, oh nice, we are moving down beautifully over here. 17, 18, oh nice, 15. 15, we're going to close our bigger position, 45 pips. Actually, we're going to close the first one and then move stops off the bigger position. Let's move it in profits right here around 20 pips. That's it. So this was kind of like the same trade we had in the first trade that we did in the simulation. Oh, we're almost coming close to that support. See, there's a huge rejection here to the left hand side. A huge, huge, huge rejection. So we're looking at price to kind of like reject this trade. Oh, damn, look at that. Coming really, really close over here. The candle's also about to close. About 50, 60 pips. Crazy. All right, right here, I'm going to close everything. 60 pips right here. Man, can't believe the trades I get live, I'm getting them on the simulation too. Normally it's the other way around. You get big trades in simulation but can't do it on live. So, all right, perfect. This is all broken down here once again. Now, since we're coming down to a very strong support on the 30-minute here as well, right? So look at this. Looking to the left-hand side, we are coming down to this rejection area. So I think it was a pretty good idea to kind of like, secure positions right here. Yeah, pretty good idea to secure positions. This is London Open at this time. We're up about 7.9% over here too. Made around almost $800 on our $10,000 account. So what we're going to do now is we will go towards Friday. Yeah, London Open is done. Oh, rejection, rejection, consolidation. And then move down. Move back down again. Oh yeah, pretty, almost clean move. I mean, breaking of this 30-minute low, clean move, 25, 26 pips. Okay, let's move on towards, oh wow, we're retracing. NFP coming down. This is still Thursday, okay. This is still Thursday. All right, here we go. This is pre-London on Friday, around, I would say, 5 hours before NFP, right? And what we're looking at, let's take a look on the daily here. Daily is at a major support, sort of like saying it can reject, but NFP is saying we're going to have good numbers. Weekly has rejected that area as well. Weekly is coming down. 4 hour candles are sort of looking like, honestly, 4 hour candles are kind of like looking like we made a low. 4 hour candle rejected this area, and for the next 4 hour candle to continue moving down. So we may want to wait for the, okay, so here's what we're going to do. Since it's Friday, so we're going to take two trades, right? One trade is going to be based only on the 4 hour time frame, candle confirmations, and the second trade is going to be based on the 1 hour, 30 minute, whatever, right? So if the 4 hour candles can maybe wick up and then come down, I think that's going to be a very good idea for price for a sort of like short swing trade kind of deal. All right, so let's remove this analysis on the 1 hour time frame. We have this support forming on the 1 hour, and just by looking at the support, we do know that if we break below the support, there's a very high probability for price to continue moving down, which is like 67 pips, right? So let's clone this over to the 30-minute time frame. Looking at the 30-minute, we kind of have the same idea. If price breaks below this low, we can continue moving down towards, 1927. So that's probably going to be a trade for London, and then we'll move on towards NFP. Let's also identify buys here as well. If we can break above, let's say, okay, so the first thing that you want to do is whenever you come to the charts, you have to identify the most recent support resistances, right? This is the most recent support. This is the most recent resistance. If we break this resistance at 1940, there's a very high probability for price to fill this wick 20 pips away and then continue on to the next range, which is like 36 pips away, right? Same idea with sells. If we break below the support, we can possibly continue down towards, this area here, 1930, which is 35 pips away. And eventually, if there's more volume, we can continue down towards 1928, which is like 60 pips away. Now we need confirmations, and confirmations we're going to get is this candle closing below the support. That's going to be a confirmation to sell. We need a candle to close below the support. Oh, it's also a support on the 15-minute time frame here as well. The 30-minute candle is about to close, and looks like we're not going to get that close. Yeah, 30-minute candle closed. We did not get that close. Yeah, I mean, we need to see a candle closing below. Not just breaking below, we need to close below. Can take an impulse entry here, but at the same time, it's just like, do we really want to risk it? Actually, let's just risk it. Let's just use 1%. 1% risk here again, right? Because we're using lower risk, so we're just going to use 1%. 22 pips over here. We're looking at price to continue down to this point at this time. So we're just using, 1% risk to just see if the impulse entry is going to work or not. That's it. If we get to 10, 12 pips, we're going to secure positions and then just close the trade. Oh, nice. Oh, nice. 13 pips over here. Impulse entry. Let's just close everything here. That's it. Because still not confident with this. Needed the candle to close below, and yeah, that's about it. Oh wow, straight rejection. Damn. Straight rejection from that level. Let's see how this 30-minute candle is going to close. 30-minute candle closed bearish. Looking at 15-minute, we're closing bearish over here. But if we want to kind of like zoom in a little bit, maybe we are closing below the support on the 15-minute, right? On the 30-minute here as well, looks like we are closing below the support, right? If we're closing below the support, we could essentially continue down if we respect the high on the 30-minute time frame. Make sense? Yeah, I think it makes sense because the 30-minute candle doesn't even have a top wick over here. It's like a very, very tiny top wick, which means this 30-minute candle has a lot of bearish volume rather than bullish volume. So if it's retracing, I think this could be a very good wick entry here for price to continue down to fill this wick. Looks risky with that traffic on the left. Yeah, that traffic is clean traffic here. Look, we got clean candle, clean candle. All we're looking at is price to come down to fill this wick over here. That's it. That's all what we're looking at. And then we're going to switch over to NFP to take some buy stops and sell stops. Yeah, I think it makes sense. Our stop is also pretty good. It's going to be a nice, let's say, 15 pip stop. TP, we're looking at around 29 pip TP. Yeah, pretty nice. I mean, if it does respect the high, I think it's going to continue moving bearish. Very, very high probability. Oh, very nice. Very, very, very nice. Beautiful. Easy, easy, easy trade. Wow, gold just gives you big moves so quick. That's it, done, right? And now we're going to move on to NFP. Range, right? We're ranging before NFP over here. Let's take a look at news. News is coming in very nice. Very, very, very nice. Oh, we're coming up pretty soon. 15, 12, 13, 14, 15. It's at 8:30. So move on to 15 minute. Move on to 15 minute. Ooh. Ay, caramba. All right. All right, amigos, look at this range, right? So when you see this range means there's about to be a big breakout. That's what this range means. There's about to be a huge breakout over here. So let's just see. We're going to use buy stops and sell stops for NFP here. Buy stops and sell stops. All right. 22, 23, 24. Slowly we're coming up. 25. Let's slow it down. Oh, let's slow it down here a little bit. We don't want to miss it. That's the last thing we got to do. We don't want to miss it. I think this is going to be a very good learning experience over here. So we got NFP coming up now, and we're going to try to do buy stops and sell stops here now. This is going to be an extremely crucial learning experience. Okay, 29. All right, so we're going to stop right over here. Okay, so we're going to stop right over here, right? So now let's look on the 1 hour time frame. Oh, actually, let's take a look on the 30-minute time frame. Okay, so now this is a 30-minute time frame. We have around 20 seconds left for NFP. So the basic idea is that once this 30-minute candle is going to close, if the next 30-minute candle breaks the high, there's a very high probability prices are going to continue moving up with NFP, right? If it breaks the low, there's a very high probability it's going to continue moving down with NFP. We're not worried about this resistance or the support because NFP is a very high volume session, well, time, right? So now if you look at the news, we can see that they're looking at a lower outcome from 1.7 to 1.3. So we're going to try to do this right here. Do you think you can put it in real time? Oh yeah, absolutely. What do you mean? Like as it happens? We do it all the time. We do it all the time. It's actually very quick. So look, this is at like 30 pips away. So we're going to go to pending orders. It's going to be a buy stop. Buy stop is going to be right here. Buy stop is going to be right here, right? We're going to accept it. We're going to remove, take profit and stop loss. And then, do you mean the speed? Okay, yeah, we can put the speed in real time. I'm not even sure what real time is over here. Okay, and then we're going to go towards sell stop. Oh, sell stop is going to be below this candle here. TP is whatever, because we're going to remove TP and stop loss. All right. Perfect. You can click real time next to this scroller for the tick. Oh, there we go. Perfect. Real time. All right. Hey, oh, wow. We did move up. Our buy stop got activated. Gonna close this buy stop. And the way it moved really, really super hard. And we're gonna close the sell stop right here. So this was a dud at this point. Damn, moved up really quick. Didn't even have time to react to this thing. But if this was real time, let's say if this was happening in real time, this buy stop, it would have gotten slipped 100%. 110% this buy stop would have gotten slipped. It would have been activated right up over here. Yeah, this is not even real time, man. This is super fast. Is this real time? Oh yeah, this is real time. All right, let's just go back here for a sec. Let's just see if we had time or not. But, oh yeah, realistically, this whole move, it would have gotten slipped. 100%, this would have gotten slipped. There was no way it would not have slipped. This would have been at least 40, 50 pip slippage. This buy stop would have been activated right up over here and would have been in an instant 80, 90 pip drawdown. You know, and then the sell stop would have got activated. And this went in drawdown too, 25 pips. You know, it would have been disastrous. All right, perfect. So essentially we did around 8 to 9%, I would say safely, right? Every position was broken down. We did some trade management. We did talk about adding positions. We talked about, we did some risk management in 1 or 2 trades, but that was about it. We looked at a lot of visualizations on the 4-hour and execution on the 15 and 30 minute. Some wick fill was there, but most of the time, all the trades were taken at pre-London and London Open when there's a lot of volume. I took a 3-month break. What training video do you suggest I take back? I would say go through the unlearn and relearn section. That's the best section you can do. Unlearn and relearn section in the database. That's the best one there. But I'm going to head out, everyone. Thank you for tuning in. As always, I appreciate it. The recording is going to be up in the database in about 4 to 5 hours. It's going to take some time to buffer. And I'm actually going to announce it there as well once it's there. So take care. We will see you tomorrow morning for the London stream. Have a great weekend.